Thank you for the kind introduction, Shireen. So hello, everyone. It's great to welcome you here today to launch the Guide for Malaysian Banks Supporting SMEs in the Sustainable Recovery from COVID. I know we're joined today by representatives from across the globe, so good morning, good afternoon, or good evening to you, depending on where in the world you are. As a point of introduction, I'm Natalie Jackson, Technical Lead at GEFI. The purpose of the session today is to provide an overview of the guide, which is being launched today, and also hear insights from a couple of Malaysian banks who were involved in its development. I've got the pleasure of being joined today by Zamima Arif, Head of Sustainability at AmBank Group, and Rizal Il-Hizan, CEO of Alliance Islam Bank Bahad. So a warm welcome to you both. It's great to have you here. I will be your host today and will provide a 10-minute presentation on the guide itself, and this will be followed by approximately 30 minutes of dialogue with Zamima and Rizal. So let's get started. So GEFI was commissioned by the United Nations Environment Programme Finance Initiative to develop the guide and associated framework, which provides 19 practical actions that banks can take to assist SMEs on their sustainability journey. So first, a bit of scene setting. Support for SMEs on sustainability is of paramount importance, especially in Malaysia, where in 2020, SMEs represented 97% of total business establishments, 48% of total employment, and contributed 38% of GDP. Whilst many large corporates are making significant progress around sustainability, especially around initiatives such as net zero, there is a risk that SMEs get left behind. The recovery from the COVID pandemic provides an opportunity to align spending and priorities to a more sustainable future for all. In developing the guide and associated framework, we spoke to Malaysian and international banks on their approach to supporting SMEs in the sustainable recovery. Although this guide was primarily developed working with the Malaysian banks, its practical actions are applicable to banks worldwide. During these conversations with Malaysian banks, it's been great to see the enthusiasm from the banks, as well as hear more about some of the great initiatives that are already underway. This is an exciting time to build on the work that's already been done and explore ways in which banks can collectively further support SMEs in their sustainability journey. It feels like there's momentum building, and there is a great opportunity to think beyond what individual banks can do towards collective action. The findings from this guide can help grow the ecosystem, both in Malaysia and beyond. During discussions with Malaysian banks, we noted 4 key areas that are motivating them to act. Firstly, the global megatrend around sustainability, with more and more financial institutions engaging on the topic. Secondly, many banks have set internal targets around sustainability, such as net zero by 2050 or X billion of sustainable lending by a certain date. Thirdly, there's an increasing demand from customers for sustainability-linked products aligned with the global megatrend. And finally, government policies and initiatives are encouraging action from banks. The Low Carbon Transition Facility and Climate Change Principle-Based Taxonomy from Bank Negara Malaysia specifically were noted. Engagement with SMEs with sustainability is low, both in Malaysia and worldwide. The guide aims to assist banks in their journey. So that provides some context now to come on to the guide itself. So it's split into 4 main sections. Part 1 is the framework itself, which includes the 19 suggested actions for bank to take within key focus areas, as well as practical steps for product development. The guide also includes practical examples, including deep dive case studies on CIMB and NatWest, as well as insights from actions taken by Malaysian banks, including AmBank and Alliance Islamic Bank. Part 2 is the foundations for the framework and provides insights on the international policy landscape and net zero, as well as Malaysian government initiatives, SMEs and the local banking sector. Part 3 looks at the differentiated approach offered by Islamic finance and how values-based intermediation is being used. Part 4 is the final section of the guide and focuses on next steps and additional support required. we'll now dig a bit deeper into the framework itself. The framework sits within the international and Malaysian context of sustainability, as well as the local banking sector and SME environment. The framework is intended to build on existing global and national initiatives rather than replace or duplicate them. The framework covers 3 key areas where banks can act, namely through a bank-wide approach, supporting SMEs, and product development. So in terms of the bank-wide approach, the importance of formalising a bank's approach to sustainability through guiding sustainability principles, governance and frameworks are key. These codify the bank's approach to sustainability and ensure focus. Reporting and disclosure around sustainability is also important, with several Malaysian banks using international reporting approaches, such as the Task Force on Climate-Related Financial Disclosures and the Global Reporting Initiative. The value of working with stakeholders is also fundamental to understand the market, communicate the importance of sustainability to staff members, and increase knowledge. Collaboration with stakeholders on sustainability through staff training, customer research and surveys, guidance from industry experts is also noted as helping increase awareness and focus on sustainability within the bank. A couple of banks we spoke to have also set up one-stop shops for sustainability solutions, providing customers with end-to-end support on certain products such as solar, from the feasibility study through to the after-sales support and warranties. This makes it as easy as possible for customers to access products and the associated support. So it's noted that SMEs need a lot of support and hand-holding, as many have limited knowledge and awareness, and they have little time or capacity to think about sustainability. Many Malaysian banks have focused on capacity building, seeing this as a key area where they can assist SMEs. Banks can help raise awareness on how other customers are approaching sustainability through shared insights from larger corporate customers with SMEs, as well as demystifying some of the aspects of sustainability by facilitating collaborations. Banks can also help SME customers understand where they currently are in their sustainability journey and where they want to get to. This can be done by embedding sustainability aspects in standard credit assessment processes, as well as completing baseline assessments for new customers. This can help SMEs think about next steps and transition plans. Many SMEs may not engage with sustainability as they can't see the benefits. Therefore, reporting SME sustainability success stories is also key, and organising roadshows to promote SME sustainability products helps to raise awareness amongst SMEs of what is available. Banks can also take a proactive approach in supporting sustainability by accelerating sustainable solutions in important sectors, such as low carbon transport or agriculture. During the COVID pandemic, many banks focused on digitalisation to ensure the long-term survival and sustainability of SMEs. The final aspect of the framework is on product development. These products need to be available for a more sustainable approach. It seems that to date, a lot of Malaysian banks have focused on solar products for sustainable SME lending, but many are starting to think beyond this to other products, including transition facilities. In product development, the banks we spoke to use different frameworks, either international, national, or developed ones in-house. This provided a clear structure and criteria for product development. The development of new products was grounded in customer research, understanding what the challenges customers were facing and how these could be overcome. A lot of banks also referred to the importance of working with industry partners, especially in complex areas or where technology was involved. Following product release, education of relationship managers to understand why sustainability is important and how it's incorporated into the product was noted as being valuable, as well as continuous product improvement as the sustainability landscape evolves. The next steps for Malaysian banks to support SMEs were noted as being further capacity building for SMEs on sustainability, including key focus areas such as measuring greenhouse gas emissions, the continued education of relationship managers, and the development of more complex sustainability linked products. Malaysian banks, however, should not be solely responsible for assisting SMEs in their sustainability journey. Collaboration and support from other parties, such as the government and industry groups, should also play a role in providing financial support, capacity building, and developing a standardised approach. So that brings me to the end of the quick overview of the guide, and we'd like to thank the following banks for their participation in interviews which helped in the guide's development. So thank you for listening, and please get in touch if you want to find out more about the guide, and a copy of the guide will be available for download from the GEFI website. So now we'll hear more from Zamima and Rizal on their experiences. So to start with, a question to both of you. So why do you think it is important for Malaysian banks to support SMEs in their sustainability journey? And please, can you provide an overview of the main ways in which your bank is supporting SMEs on sustainability? So over to you first, Zamima.
Good morning, good afternoon, good evening to everyone who's joining us at this launch, and Assalamu alaikum for those who are from all parts of the world for this launch by GEFI on how to support SMEs from the perspective of Malaysian banks. Now, the first question that you asked us was actually about the why Malaysian banks should think about supporting SMEs in their journey towards sustainability. Now, you already mentioned the key element, which was the part on the fact that they account for 90%, 45% of the labor force, as well as 38% of the GDP. So that's one of the key areas why we should also concentrate on them. Now, one of the key areas which SMEs are also increasingly facing pressures from is to measure and manage their impact on the environment. So that's kind of like the shareholder perspective and the people, the customers' perspective who's looking at the SMEs. The second part is actually they form an integral part of the supply chain for a lot of people in the market. And some of these contracts, when you're trying to secure contracts, be it with governments, GLCs, big, large corporations, now these corporations and these people are demanding that the SMEs also play a part in making sure they are also on the sustainability journey. For example, if you take a global company like Nestle, they have committed to look through their supply journey up to the little farmer, where they get single origin coffee from or milk products from, to also join the sustainability journey. Therefore, this is one of the key reasons why we as banks need to support them on the sustainability journey, because that is to ensure their long-term survival. And that's also to make sure we safeguard our balance sheets in that way when we are also lending to the SMEs. We also have to ensure that the resources that the SMEs are going to get from, they would then be able to continue to offer their products and services in the future. Natalie, I hope that answers your question or with regards to why we support SME. Now, just to check on the next question was actually on how mBank is actually supporting SMEs on sustainability journey. Now, this is a very interesting question, and this is a question that I actually had to grapple with, because currently, as you may know, that Bank Negara has come out with the climate change principle-based taxonomy, which means that we have to grade our corporates, our companies, all the non-individual accounts, to give them a rating from a climate change perspective. What's interesting is the questions that we get from our RMs. How are we going to ask these questions when we ourselves don't understand these questions? So the first thing we did was actually to educate our RMs so they can then speak to the SMEs. So how we support them right now, what is going on right now is having that conversation with the SMEs. How do you do the math with GHG calculations? How do we then use that calculation to map out your journey? And then we're also educating them through our RMs. It's not been formalized. Later on, I'll share a little bit more on how that process is getting formalized. But right now, what we've done is, as I said earlier, we've actually sort of engage with our own RMs, our relationship managers, so that they understand the kind of question that they have to ask the companies. And now the dialogue is ongoing with the companies. Okay, so these are the questions you're asking me. How do I then, if I'm graded at a certain level, how do I then move my rating to a certain level? And that conversation is what is proving to be powerful, because the kind of engagement that I'm having with the RMs is very interesting, because the SMEs are actually asking us the question, so does this mean it's going to increase the cost of operating? How are we going to manage the cost of, including all these new elements from ESG perspective? Does that cost increase my costs? And how can I then support myself, especially right now, as rightfully you mentioned, post-COVID era, a lot of the SMEs are actually very focused on survival and pushing forward, growing from where they've started post-COVID. So we've, this is exactly why you need to educate the SMEs to say, this is exactly why at this time, business continuity plans post-COVID, this is why you need to think about making yourself more ESG compliant, thinking about sustainability, thinking what you can do to save costs. So that's one of the ways that we are actually supporting the SMEs.
Fantastic. That's great to hear, and especially around that kind of education capacity building. And now over to you, Rizal. It'd be great to hear, same questions of why you think it's important for Malaysian banks to support SMEs and some of the work that you're doing at Alliance Islamic Bank. So over to you.
Sure. Thanks, Natalie. So SME's importance to the economy, we don't need to belabor this. We know the stats for this. They're a third of the economy. They're at least half of the employers of the workforce population in Malaysia. They're 90% of registered enterprises, right, and 20% of exports. And yet when you look at the dimensions of this, you compare that against the readiness and ability to address risks associated with ESG, the story might be slightly different, but there's a huge contrast here. There's an economic summit that was held here a couple of days ago where I think one of the things discussed, or one of the findings that they've had, is that SMEs do not necessarily see ESG as a priority currently, and they're still trying to grasp the benefits and significance of ESG adoption. A study done by a local institution before this found that SMEs cited increased costs as a disincentive for ESG adoption, and it's not compelling proposition for them, considering that many of the SMEs are still reeling from the impact of the COVID-19 pandemic still, right? So what you have here is huge impact on the economy, perhaps not so ready and not so able to address ESG risk. So you're looking at a segment that's actually quite vulnerable to ESG risks, right? And even so, as instances of natural hazards become more frequent and more intense, that vulnerability increases. In 2015, for example, we had a huge, in Malaysia, basically we have flood risk, which is the predominant natural risk that we have here, or physical risk. In 2015, we had floods in Kelantan, for example. 13,000 SMEs were affected, with about 1 billion ringgit in estimated losses. In the more recent floods in December 2021, the estimated losses were more around to the tune of about 6 billion ringgit. And 35% of SMEs affected were in the economically critical Klang Valley area. And these disruptions have caused disruptions in supply chain and business continuity, and is exacerbated even further by the lack of take-up of natural disaster insurance. The coverage, I think, was estimated at only 10% of the December 2021 flood losses. And we know of farms which have been destroyed, factories and businesses devastated, and stocks spoiled due to the floods, right? Why do we have this state of vulnerability? One is lack of knowledge on the part of SMEs. That awareness perhaps is still at the nascent stage and probably needs to be addressed. Second, in terms of resources and capability to address ESG risks, and on the flip side, tap on opportunities, is also at that nascency. Thirdly, there's lack of available solutions and tools in this particular area. Even as corporates struggle in this particular space, that challenge is multiplied or magnified even further in the SME space itself. So from the perspective of Alliance Bank, our focus has always been in the SME space. So we're here to help SMEs with sustainability risk, as well as framing it from an opportunity perspective as well, by providing financial and non-financial assistance to ensure the longer-term business viability, which I think Zamima alluded to earlier as well. We clearly take a more nurturing approach for SMEs and business owners to transition towards sustainable practices as well. As I mentioned, we've long been an advocate for and supported SMEs. Our mantra is to be the most important relationship in business owners' pursuit of success. So that relationship encompasses a more holistic view of support to the business owner, be it from a financial or non-financial, i.e. advisory perspective. For sustainability, we support SMEs in two ways. One is we provide funding support for investments into renewable energy technology and investments to transition to a low carbon business. And secondly, we provide sustainability assistance program for businesses. On funding, we have a goal of supporting at least 10 billion ringgit in funding and investment into new sustainable businesses, projects and assets. Last year, we've already achieved 2 billion ringgit in new sustainable loans and investments. Now, out of that, 20%, or about 410 million, was directed towards SMEs. On sustainability assistance, we've entered into two strategic partnerships. First is with Bursa Malaysia, and the other is with the Malaysian Green Technology and Climate Change Corporation, otherwise known as MGTC. Our collaboration with Bursa Malaysia is on their hashtag financing for ESG program, which aims to improve ESG adoption practices amongst PLCs. Under this program, PLCs undergo a FTSE4Good gap analysis conducted by Bursa. Subsequently, we provide funding to help these PLCs transform their operations to address the specific gaps identified and match them with green solution providers, which we have under our BizSmart solution portal, which is sort of like a one-stop online business community portal where we provide business owners relevant solutions and resources for their sustainability journey. Apart from that, we help business owners improve their ESG practices with advisory and training under the Green SME Nurturing and Development Program. Our partner MGTC assists ESG solution providers to obtain the My Hijau certificate and be listed on the My Hijau directory. And that's an online resource for certified green products and services. The My Hijau mark is actually the official green recognition endorsed by the Malaysian government. So that's, in a nutshell, how we're helping SMEs.
Fantastic. It's great to hear of the amazing work being completed by both banks. So now over to you, Zamima, to just dig a little bit more into it. So I know AmBank have been doing a lot around greenhouse gas emissions specifically. Please, can you share a little bit more about your experiences, both the kind of successes you've had and the challenges that you've had to overcome?
All right, thank you for that, Natalie. That was a very interesting introduction by Rizal as well. So the GHG emissions, maybe I'll talk about the challenges first, because we've kind of mapped out our own, which is the scope 1, scope 2, scope 3. The scope 3 under the financed emissions, the GHG emissions, that's something that we are all, I think it's a journey that we're all going to be embarking on when Bank Negara comes out with its policy document on climate risk management. But internally, the greenhouse gases emission, we've got lots of different initiatives around that. We've got targets that we have to achieve internally. And then we've also got single-use plastic education, know your carbon footprint education going on. The solar PV panels at our Damansara Fairway 3, which is the building or office building, they continue to generate about 86,000 kilowatt of clean energy, and they offset about 50.32 metric tons of carbon emissions for financial year 2022. And then in financial year 2022 as well, we significantly reduced our overall carbon emissions by 1,500 tons from financial 2021. Through several energy management initiatives, such as the LED lighting, subscription to green and renewable energy source, as well as lesser traveling. Now, the lesser traveling part, of course, is because of the COVID restrictions as well during the pandemic. So that's a word of caution. I think that's also a form of a challenge that we're looking at, because we cannot map out a GHG using just the during COVID emissions. So that's something that we're also looking at. How is it, now that everything is opening up, how will that add traveling time, car usage? So all of those are actually being calculated as well. Now, we also were issued by SEB, which is the energy plant, renewable energy certificates, to certify that all our energy consumption for operation in Sarawak was supplied by hydroelectricity source, resulting in a carbon offset about 970 metric tons of CO2 emissions for financial year 2022. And the main thing is we've also subscribed to a green electricity tariff by TNB for its energy consumption from its operations in Peninsular Malaysia in February 2022, which has resulted in a carbon offset of 133 metric ton of CO2 emission for financial year 2022. We've also reduced other things. So I told you about the single plastic use. We've also done the A3 and A4 paper consumption by 31% in financial year 2022, exceeding some of our targets. Now, for all of this, the energy consumption itself, and also getting ISO certification. So we have a lot of targets that we have set for ourselves. Now, and each of it is measured on a quarterly basis, and that's measured not just by the department that's responsible for it, but we also report it as part of KPI for management, and then it is also part of KPI that is sent out to the board as well. Now, what is the challenge? The biggest challenge, of course, is making sure that we don't become complacent, because of the fact that some of the math was done during COVID. So I always like to ask the question, okay, now that we are back traveling, back in office, the lights are on a lot longer. How are the calculation right now, and what is the math? And I want to know how we can actually reduce those GHG emissions as well. Now, we've also done something else because we did ESG Investor Day this year, beginning of January 2022. We also started a collaboration with Yayasan Hijau, which is mapping out 100 million planting of trees in Malaysia. So we did a collab with them to plant trees for, instead of giving out any sort of like, for each of our participants, for each of our people who came for the conference, and as well as the speakers, we planted trees on their behalf as well. So that's a collaboration that we think that will become even more deeper as we go along, and that will also be part of how we do the math for our GHG emissions in the building, as well as part of the group as well. I hope that answers your question.
Thank you. And it's that focus as well with greenhouse gas emissions and considering the portfolio and SMEs as well.
Yeah.
And when we last spoke, you'd mentioned that ANBank have been developing training on sustainability.
Yeah.
Please, could you talk a little bit more about the program, and also, what you think the essential topics are for SMEs specifically?
All right. Okay. So that's actually, we're doing it with an external training provider. So we're going to we've already formulated some sort of a course outline for that. So one of the key things is actually mapping out for the SMEs what ESG and sustainability means for them, as just mentioned earlier by Rizal as well, that, they are having issues and understanding and grappling how this works for them as SMEs, and is it cost effective for them? Does it mean they have to spend more money? How important is it for me? So I think that is the first thing we need to lay the foundation. Why is it important? And I think a lot of them are also beginning to understand that if I'm going to trade with another bigger MNC, GLC, government, or any other organization, this is going to be a big point. So that's the first core foundation that we want to impart. The next thing we want to do is actually, around GHG emissions itself. There are a lot of people are finding it difficult understanding, how do I do this for my business? There are a lot of resources out there. So as long as you can actually teach them sort of to go to those resources and to calculate, I think that would be one of the key areas. Now, we internally also done something called Know Your Carbon Footprint for our own people. Now, this is how we get our RMs to learn intuitively what it means, what greenhouse means for me as an individual, and what it would mean for the SMEs as well, specifically. So the other part of the syllabus is going to be GHG calculations. Now, we also understand that different industries have different ways of doing the math, and we can't sit down and teach everybody in every industry. So for starters, we actually are just going to point them to certain resources where they can actually go to get more education on it. There's only one way of doing this, which is knowledge transfer and capacity building and upskilling. There's only one way to kind of engage them. Now, I also think that the financial aspects of it, doing, sort of like mapping out in their own minds, why is it very important to be on this journey? And the other part, which I think, which is the last part of the syllabus, is actually opportunities. Just now, Rizal mentioned all the resources that are available for SMEs. So the opportunities when you transition from going to a lower carbon economy, going greener, identifying, Mbank has also tied up with some people who do solar panels, and then we finance that. So how do factories who want to become greener can actually engage with some of these companies and also fit their plants with solar panels? So the education on those parts, that's one of the key areas that we're looking at. So the opportunity piece, what is it in it for me to be on this journey? Why do I need to be on this journey? How come I should be on this journey? So from a perspective of financing, from a perspective of emissions, from a perspective of engaging with your customers, from a perspective of dealing with the people that you are going to be your suppliers, in every aspect of it, it becomes important. So we're kind of like taking in a syllabus. Now, although it sounds like a lot of things, we also need to kind of run it down to smaller pieces so that they can actually engage properly. So I think that one of the laying the foundation and then giving them the education on the GHG emissions is going to be very, very crucial. Now, one of the things I think what's in it for you is actually something called carbon tax, right? Singapore already has a carbon tax and they already have the math for it, and they have the carbon pricing as well. Right now, I think it's Sing 5, which is expected to go higher and higher. Now, if that is going to be coming to town, everybody needs to know the math. So what's in it for you is some of these things that we have to explain to the SME. So that's where our training is kind of how we mapped out the whole training program for the SMEs. So that's hopefully that will be launched sometime this year very quickly, and then we can onboard those training, and then we can also tie up for future trainings. The SMEs actually can engage directly with the trainers to sort of train them further and deepen their understanding on that specific subject.
Fantastic, that's great. And I think it's key, you say, Zamira, about, highlighting the opportunities for SMEs so they can really get on board with sustainability. So thank you. Now over to you, Rizal. We understand that Alliance Islamic Bank works with partners to conduct gap analysis and develop sustainability roadmaps for customers, as well as offering sustainability solutions and financing. Please, can you talk a little bit more about what you've done in this area and share some success stories? Over to you.
Exactly. So I mentioned about the sustainability assistance program we have for businesses. The goal of this program is to offer a comprehensive value proposition around sustainability that helps business owners adopt sustainable practices for their businesses. I mentioned earlier about the issue of costs. So one of the things we want to ensure is that in this assistance, it helps to reduce the business owners' operating costs on energy, waste, water, and as much as possible utilize renewable sources. We want to help them enjoy any green tax or capital incentives that come with these actions. We mentioned earlier about how if they interact or engage with MNCs, and with that comes sustainability requirements, we want to help them meet those supply chain requirements and become much more competitive. We want to improve the branding of these companies and or their products, and prepare them to have a green-friendly IPO profile and enhance their prospectus to investors. So there's three parts to this sustainability assistance program. One is on the advisory and outreach piece. Second is on the transition enablers. And the third piece is around financing support. Under advisory and outreach, what we offer is an ESG gap analysis or a screener to help these SMEs identify potential focus areas for SMEs to improve. Like mBank, we have also operationalized using the CCPP, the climate change and principle-based taxonomy, into the screeners we apply with our customers at the point of onboarding, as well as during annual reviews. And yes, they're great icebreakers when it comes to understanding ESG gaps within the business. But at the same time, also, it helps define some potential action areas, and we could help point towards solutions within our own program to help our customers address those gaps. Second is we do workshops and trainings to enable the SMEs to understand the specific topic of ESG and understand the risks and opportunities that come with paying attention to the ESG aspects of their businesses. We help them with advisory services to build roadmaps towards sustainable business adoption. And we help to profile successful projects and improvements done by these SMEs. So that's the bit under the advisory and outreach. On the second pillar around transition enabling, via the BizSmart solution portal that I mentioned earlier, and with the MGTC partnership that we have, we provide the widest range of ESG solutions for our clients. So this can come in the form of advice or consultancy by folks in terms of how do they reduce their energy usage, or it can come down to understanding perhaps how they can reduce their greenhouse gas emissions through more efficient processes. We also include solution providers. So this may include solar PV providers, other types of renewable energy technology providers, and so on and so forth. Secondly, we want to be able to match the right solutions to the customers to improve their ESG gaps. There are, of course, price points considerations for SMEs, and it will be upon us to ensure that we have different levels of providers to ensure that it kind of fits into whatever the price appetite levels would be for these SMEs. We also want to ensure that the solutions that we provide focus on the highest cost efficiency and environmental impact. So it can come from technologies ranging from solar, biogas, water, waste, and circular type of solutions. The third piece is on financing support. So the financing for ESG program, which we do with Bursa, we finance green tech providers. We finance green projects. We provide sustainability-linked loans, or rather, that's something that we're working on, sustainability-linked loans as well as Sukuks. And we will also finance residential as well as business premises, rooftops for solar panels as well. We tap on the Low Carbon Transition Facility Fund, which Bank Negara provides to offer solar PV rooftop financing for SMEs. Apart from that, as I mentioned, we're looking into green as well as sustainability-linked loans and Sukuks as well. Now, through this program, we have assisted more than 20 customers, and so far, in terms of financing support, it's about 48 million. This feeds into that 300, the number that we had earlier, about 300 million in financing that we directed towards SMEs. So that's pretty much in a nutshell, what we provide to our customers, Natalie.
Yeah, fantastic. That's great. And it's great to see that kind of holistic approach and also helping SME customers on that transition of where they are, where they need to get to. So the final question to you, Rizal, is, how has being an Islamic finance institution and initiatives like value-based intermediation shaped your approach to sustainability and work with SMEs?
Yes, so as we know, sustainability is actually quite congruent with the whole value-based intermediation or VBI movement in Islamic banking. The VBI focuses on upholding social justice and developing a values-based economy as part of the Islamic banking business model. This has had a huge impact on Alliance Islamic Bank. Our VBI/sustainability journey began in about 2017 when we pioneered the development of a program to assist SMEs to succeed in the halal economy. We also developed a social crowdfunding program for social enterprises and at-risk communities to help them elevate themselves economically through entrepreneurship. This was all done under a mission to promote financial inclusion and businesses and projects that impact positively on communities as well as the ecology. A couple of years ago, in about 2020, 2021, we paired the experience we had in Islamic banking side with the group's focus, or the larger Alliance Bank group's focus on helping business owners succeed, to establish our approach to sustainability, which is premised on 5 main areas. One is we offer products and services to promote transition to sustainable business models. 2 is we encourage businesses to embrace digitization to be more sustainable. Our folks here have kind of coined this term called digitainable, which is a mix between digitization and sustainability. 3rd is we work with partners to provide advisory on sustainability roadmaps, which I mentioned earlier, implement sustainable solutions within that roadmap. 4thly, we integrate sustainability considerations into our own policies and practices. And 5thly, we promote the financial empowerment of SMEs through education, upskilling, as well as financing. Now, all of these above are consistent with the 5 purposes of Sharia, which are the protection of life, lineage, wealth, intellect, as well as faith. Apart from that, the VBI movement has also focused on developing tools, practical tools that can be used by Islamic banks when it comes to assessing ESG risks in different sectors. So there have been around 6 sectoral guides that have been published by the Islamic banking industry, which we call the VBI Impact Assessment Framework Sectoral Guides. Now, these guides provide an assessment of the key ESG risks within specific sectors, how to manage and measure them, and basically the specific things that we look for in terms of mitigation when we're assessing ESG risks in our customers. Now, these VBI sectoral guides have actually been quite useful for us in Alliance Bank Group as a whole, not just on the Islamic banking side. In fact, we've incorporated the elements in the VBI sectoral guides into the overall bank's risk acceptance criteria. So we apply this to our customers currently as we onboard them and as we review them on an annual basis. Okay.
Fantastic, that's great. So now I'm aware of time, and it'd be great to speak to you both for much longer, but unfortunately time is tight. So I think just to finish with one final question to you both, which is if you had 3 pieces of advice for other banks wanting to support SMEs on their sustainability journey, what would they be? So over to you first, Amima.
I think the first thing is education. So let's all educate the market. So let's get everybody on board. The second thing is actually, I like the piece which Rizal pointed out, which is the financing part and the advisory part. So the three things that I think are great is the knowledge, advisory, and financing.
Fantastic. And over to you, Rizal.
Echo the same thing. I think number one, advocacy and awareness would be the first wave of efforts. Banks need to invest in outreach programs like what Zamima mentioned and what Lions Bank is also doing as well. We need to enlighten SMEs on the ESG dimensions of their businesses. Frame this not just from a compliance or risk subject matter perspective, but more as an opportunity to ensure the longevity and growth of their business. Second, we need to embed ESG due diligence into credit and investment onboarding and annual reviews. This forms a basis to have conversations with customers on ESG risks and identify opportunities they can pursue arising out of ESG factors. Here it's best to nurture rather than exclude. Thirdly, SMEs are a wide demographic with different levels of readiness and motivation for ESG matters. Segment accordingly and dedicate efforts to low-hanging fruits before moving on to other more challenging segments. I know it's three, I'll give you one more bonus advice. Banks need to focus on their own conduct. Need to ensure that we walk the talk as well, ensure that we're doing the right things when it comes to sustainable business models.
Fantastic. I love a bonus top tip as well. So just leaves to me to say a huge thank you to both Rizal and Zamima for your contributions. It's great to speak to you on the day that we launch the guide, which will be useful for banks worldwide. And then also to say thank you to the audience for listening and enjoy the rest of your day. Now back to you, Shireen.